What is petty cash? Well, some cash purchases are just too small and insignificant to log to the accounting journal. These are the everyday purchases made by the employees of a business, which may include small office supplies, postage, kitchen necessities, or other office needs. To reduce the complication made by these purchases for the accountants, a petty cash fund is established. This fund is managed by a petty cash fund custodian who collects the money from the bank and hands out cash to employees and receives receipts over the time period of a month. When cash is put into the petty cash fund is debited and the cash fund is credited. This is essentially a check given to the custodian of, let's say, $300 for the fund to use throughout the month. At the end of the month, the petty cash custodian will do a petty cash reconciliation. This involves adding up total amount of all the receipts and calculating the total amount of cash to replenish into the fund. These expenses are debited appropriately and cash is credited for the difference between the expenses throughout the month and the amount to replenish the petty cash fund back to $300. For the next month, the same process occurs, with the employees taking money from the custodian and supplying receipts in return. However, at the end of this month, the custodian notices that there is a $5 difference between the receipts and the actual money left in the account. To account for this, the custodian will debit in the journal cash over short an extra $5. If there was more money in the petty cash drawer than the receipts total, we would credit that amount. We do this so that when cash is withdrawn from the cash account next time, the correct amount is debited into the petty cash account to replenish it back to $300. In summary, the petty cash fund is useful to simplify the accounting process for small cash purposes. We never credit the petty cash fund, but rather cash is credited to replenish the fund. Any differences between the receipts and the amount in the fund is counteracted by a cash over and short journal entry to return the petty cash fund to its original balance at the start of the new period. I hope you learned something new today, and thank you for listening.